Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxing.
Hello, and welcome to this two-part episode on the Client's Toolkit and the Bookkeeper's Toolkit. As I record this, only another week left to tax season, and it's winding down for me, even though it's crunch time for the accountants and the tax preparers. My tax season starts in November and goes to around April 5th. I'm just glad that I can get back to the important things in life, regular bookkeeping, and recording these podcast episodes for all of you. And of course, all the other things that life has to offer, like going out to dinner with my wife tonight. And if that sounds corny, I apologize, but it really is the truth. I'm Paul Rosenblum. Before I start this episode, though, I have a question for all of you. Would you sign up for a bookkeeping course either in this format or on a website with videos, by the way, produced by the same host and team as this podcast? Please email me at bookkeepermensch@gmail. Now, on with the episode. Now that tax season is winding down, at least in the United States, however I feel for my Canadian bookkeeper friend, she's still in the middle of it, it's time to reset, not only for bookkeepers and accountants, but for clients as well. Every tax season, I always get a year worth of bookkeeping to do for several clients or new clients, not in December or January, but in the middle of March with an April 15th filing deadline and the deadline of April 1st to get the finished product to the tax preparer. And I know I shouldn't, but I always say yes. And somehow, everything always gets done. This is a self-employed mentality, never saying no to more work. However, with tax season winding down, this is the time that clients, as well as bookkeepers and tax preparers, reset. Rethinking your software needs, rethinking business goals, rethinking the possibility of changing tax preparers, or even rethinking changing bookkeepers. Something that isn't thought about, though, is how to start preparing for the next tax season or for your tax filing 6 months from now if you are currently on extension. Hence the client checklist or toolbox, as I call it. One of the most common problems that I have with new clients is having them understand the process. The books don't do themselves. It's not just entering income and expenses. There is work involved in creating books that will stand up to a possible audit. So the first tool in our client toolbox is knowing what is expected of you, the client, and following the process that the bookkeeper sets up. Understanding the most efficient way of passing along information to your bookkeeper will help in the year-long process of getting accurate books on time to be filed actually before the day of the filing deadline. I have spoken about a bookkeeper creating a relationship with their clients in episode 14, but it also works the other way around as well. The client has to try to get to know how the bookkeeper works as the bookkeeper is understanding more and more about your small business. Every bookkeeper works a little bit differently. As you probably know, my methodology is to enter every transaction into the software, and after all accounts are reconciled, then send a list of transactions in an Excel format to the client with all of the transactions that I couldn't categorize. I do this at the end of every month entered. I create a column in the spreadsheet for the client to add their comments. I also will put a memo in any transaction that I think would or could be eligible for a 1099 at the end of the tax year. I would like to get the W-9 forms as soon as possible so it can be entered well before January of the next calendar year. And I would like a response in a timely manner from the client so that I can finish that month's books without going back months from then to make adjustments. This, for some clients, feels funny to take the lead of a bookkeeper who you are paying for a service when most small business owners are used to supervising their own workers themselves. It's a 180, and I can understand how some business owners won't feel comfortable with this. However, when you see a doctor, you follow their lead, and few people question what medicines doctors prescribe or treatments they might administer. If you don't like your bookkeeper system and they aren't willing to negotiate, remember there are other bookkeepers out there waiting to speak to you. Number 2, don't talk down to your bookkeeper. I'm putting this in the client's toolkit because the information about you and your company that the bookkeeper has is and should be very important for you to keep private. You don't want to make any worker or employee disgruntled, my Larry David Curb Your Enthusiasm reference, especially a bookkeeper. I use this word a lot in the podcast, but have a good relationship with your bookkeeper. If there is a problem, make a change before it gets worse. Remember, unless you hire a bookkeeper to work at your office and you are supervising them as W-2 employees, listen to episode 5 and 6, by the way, then they are self-employed and run their own companies and prepare the books for several clients with their own system in place. I have had people tell me to not forget to enter a loan or a vehicle that they purchased and make sure that they are in the books. I don't think you would say something like that to a plumber fixing a leak in your kitchen. You hired a professional plumber who was supposed to know what they're doing. If they don't, you use another plumber the next time something happens. The same with bookkeeping. This next one is a bit tricky. Tell your bookkeeper everything that's going on with the company, at least financially, the good, the bad, and the ugly. Bookkeepers do not go to audits at the IRS, and bookkeepers are not signing the tax return. Yes, if you're doing something that is not complying with the law, the bookkeeper might just walk away from you as a client. That's always a possibility. However, if you tell your bookkeeper what you are doing and why you are doing it, there might be an acceptable way of fixing it so that you are complying with the tax law, but only if your bookkeeper knows the situation and is versed somewhat in taxes. I have had clients tell me about things that they are doing that they knew were not right, but with a couple of minor changes, we can become compliant. If your bookkeeper isn't well versed in particular tax laws, then have that conversation directly with your tax preparer. Number 4, I know it feels funny for some people, but give your bookkeeper access to your bank account and credit card accounts. I've said it before, if you can't trust your bookkeeper, who can you trust? With everything that I have said about downloading bank and credit card transactions automatically into online or even desktop software, unless you have bank and credit card statements, you won't be 100% sure if you're missing transactions that did not download. If you don't trust your bookkeeper enough to have access to that information, then you might need to switch bookkeepers. Number 5, I'm not terribly happy that I have to include this in our list, but I'm going to do it anyway. Pay your bookkeeper in a timely fashion. If you get behind in paying your bookkeeper, they really don't have to do your bookkeeping. There is no legal fiduciary agreement between you and the bookkeeper in most cases. I am very patient with people, but when they get to about 5 or 6 months behind in paying my monthly invoices that I email every month, I stop doing their bookkeeping. Many times, only at the end of the year do I hear from them asking me where their books are and if they're ready for tax prep. When I tell them that they're not, and the reason being since they owe me for 5 or 6 months of invoices, they either pay me pretty quickly or they make a large payment thinking that the payment would start the work up again. By the way, it generally won't. Number 6, personal expenses versus business expenses. It is your responsibility to separate your business expenses from your personal expenses by using a dedicated bank account and a dedicated credit card for business purposes. If a mistake happens, or if you happen to be somewhere where they won't take an Amex card that you use for your business, and they only take a Visa, which you use for your personal expenses, these are the exceptions. Even if you have a sole proprietorship and your bank won't give you a business checking account, you should open up a separate personal checking account for your business. If you don't do that, you would be giving more information to the bookkeeper than they have to know. I know where some of my clients buy their underwear, among other personal things. TMI. That information will go with me when I go permanently. It's all about relationships. You, as a client, have to feel comfortable with the personality of the bookkeeper, the methodology that the bookkeeper uses, and the amount of trust in that particular bookkeeper. A well-trained bookkeeper is a different kind of worker as a W-2 payroll or subcontractor than most others. As I have said many times before, there are really good bookkeepers, really poor bookkeepers, and everything in between. The more that you, as a business owner, know about bookkeeping and taxes, the more you can catch mistakes or careless errors that a bookkeeper might make, or even fraud by the bookkeeper. I can tell you stories, but that's for another episode. Please email me if you like the real-life stories and if you want me to continue telling you those. But I digress as usual. No! I'm all for delegating responsibilities if you are a business owner, but bookkeeping is an exception. As a business owner, you should be part of the process, not an onlooker of it. Next time, part 2, the Bookkeeper's Toolkit. Until then, I continue to be Paul Rosenblum.